Happy Friday, traders. Well, look, this week started very positive with respect to what's happening in the Middle East and developments there. With Trump calling off the strikes on Iran and basically saying that a deal on the Strait of Hormuz was done and it would reopen in days. So yes, at the beginning of the week we saw crude drop like a rock. Crude dropped from closing at $86 on Friday, and it dropped a good 15% down towards the low 70s, around $74 on the back of this positive news. Then midweek, we had a lot of silence. But overnight, we did hear from Iran, and the news certainly wasn't positive. So Iran has come out and said that, look, they have not been talking or dealing with the US. And they've come up with their own plan to reopen the strait. And what that looks like is that, they will permanently ban the US and Israel and other hostile nations from using the strait. They will also charge a fee of 7% from tankers going through the strait. And any tankers that go through and don't abide by their rules will get slapped with a 20% penalty by Iran as well. So big developments there that no doubt Trump cannot accept these sort of terms because one, he's always stated that the strait would have to reopen with no charges. And secondly, the fact that they're permanently banning a lot of traffic through the strait as well, no doubt is not going to go down well. So overnight, with that news, we did see crude go back up again. It was up about 3%, so pushing back up towards $78 and $80. Look, we do have, obviously it's Friday, we've got the weekend coming up. We do have gap risk. In the last 4 weeks, the first 2 weekends, we had positive gap risk, market actually going up higher crude. And the last 2 weekends, we've had negative gap risk with the market gapping a lot lower. So that gap risk is real, but I'd suggest that the gap risk this weekend is probably skewed to being a topside gap risk. And obviously can't cancel out that, that we could potentially get some sort of military action strikes happening this weekend. But in any case, obviously the geopolitical news has gone from positive and has now flipped, surprise, surprise, back to negative. So yes, bias at the moment, no doubt, is probably buying crude. So how have other markets, the broader market, reacted to this? Look, surprisingly at the moment, it's been a bit of a subdued reaction. If we have a look at US bond yields, US 10-year yields are pushing back up towards 4.7%. They're around about, closing around about 4.67. So getting back towards 4.7 and above, look, these are super elevated levels. And the way technically the market has been trading, it does look as if we're probably not far away from a potential spike higher. And if those bond yields did spike higher, certainly it is going to move a lot of other markets and in a risk-off way. So certainly I'd be keeping an eye on those bond yields, and especially if we do start seeing them wanting to push up towards 5%. That's going to be a big deal. It's going to be obviously a lot of headlines and a lot of front page news on the back of that. So keep an eye on those bond yields. As far as equity markets are concerned, pretty quiet session there for the US. S&P and NASDAQ were down marginally, just 0.3%. Look, they have had a fantastic week. S&P did rock up to new record highs. So look, seeing them retrace a little bit is obviously is not such a big drama. But obviously what happens in the Middle East and what happens with crude potentially can have an effect on those, and gap risk again on Monday for US equities. So not sure I could be chasing US equities fresh long at these levels, that's for sure. As far as the currency market's concerned, not a lot of action there. DXY is back trading at 100. Obviously, dollar yen's the big focus on the intervention that we saw, the heavy intervention, joint intervention, US and Japan. We did see that trade as low as almost 155. That is retraced back up to 158.50. But look, I'd suggest that back up towards 160. No doubt we're going to see some sellers. I don't think we're going to see intervention at these levels, but certainly above 160. Both the US and Japan have said that they wouldn't hesitate to go back into the market. So, I would be hesitant to be long above 160, but selling in front of 160 may be the preferred strategy. And as far as precious metals are concerned, they've had a fantastic week. Gold went up and printed a high of 4,300 yesterday, before settling back down towards 42.50. I'd suggest that at the moment gold is going to be influenced again by what's happening with crude. So if crude goes higher, I think it's going to struggle to get through that 4,300. And also, obviously, if bond yields go higher, it's not going to help gold as well. So watch, if you're trading gold, be watching crude and bond yields very carefully. But look, having said all of that, we do have some very important economic data coming out today in the US, and that is the monthly non-farm payrolls. Comes out on the first Friday of every month. What are we expecting there? So markets expecting the headline number to be plus about 85,000. The unemployment rate to remain steady at 4.2%. Look, as far as Fed's concerned, if that comes out as expected, it still shows a pretty solid, resilient bond market. So certainly, if inflation is going to be the Fed's main focus, right? Obviously, the market is volatile over payrolls numbers. So if we did get a number that came out above expectations or below expectations, no doubt that is going to give some movement in currency markets, especially, and obviously in gold as well. So watch out tonight. Two key takeaways is that we do have payrolls coming out, and also headlines with what's going on in the Middle East, no doubt, is probably going to be the bigger driver, especially going into weekend. And be careful with gap risk, because it is real, and every weekend we've had some very decent gap risk. Anyway, good luck with your trades, and we'll check back in with you next week.